Good afternoon. It's a real pleasure to be here speaking about Thor Explorations, a company which I founded and went public in 2011. Just a disclaimer, there will be forward-looking statements in this presentation. So I will start with an overview. Thor is a West Africa-focused gold producer. We have been producing gold now for just over 3.5 years. We're in our 4th year of production. We are producing gold from our flagship asset, the Segilola gold mine, which is the first and still the only large-scale gold mine in Nigeria. Produces between 85 and 95,000 ounces per year. This year we have a guidance of 85 to 95,000 ounces. We should end up producing around about 90,000 ounces this year at an all-in sustaining cost just below $1,000 per ounce. So we're producing at a very healthy margin. And that is really our cash cow, should I say, the flagship asset Segilola. It generates sufficient cash to fund our other activities around West Africa, where we are currently exploring and also in development. The Segilola mine itself is based on a resource of just over 500,000 ounces, grading at just over 4 grams per ton. And that's partly the reason it's such a low-cost mine to run. We are generating record cash flows. You know, gold is pretty much at an all-time high gold environment. And that has also enabled us to take a long-term view in Nigeria, where we are redeploying a lot of this cash into extending the mine life at Segilola, because we have significant sunk capital there. We've paid for our mine, and every incremental ounce of gold we find is essentially what we would like to call a super ounce. There's no capex requirements. Every single ounce of gold goes directly to the bottom line. So we are investing heavily in exploration as well. This has been a very transformational year for us. The 31st of December last year, after going through, this is a project we've taken from a maiden resource through preliminary feasibility, through a bankable feasibility stage, through construction. We built this mine through COVID, and then into production. 31st of December last year, we paid off our last loan. So we have no loans outstanding, no senior debt, clean balance sheet, and we've transitioned now into a dividend-paying company. We pay a dividend every 3 months to our shareholders, and we are sustainably returning money to shareholders as we grow. Outside Nigeria, we have a second project, the Douta project in Senegal. It is an advanced exploration project. We are just coming through to the finish line on a preliminary feasibility study. This project has 1.78 million ounces in a global resource. It's much bigger than what we have in Nigeria, albeit it's a lower grade. That's divided in a half indicated, half inferred resource. And this feasibility study, preliminary feasibility study, which we're looking to complete before the end of the year, is going to be the first chance to have some economics attached to this project. I think as a company, we are strictly viewed as a Nigeria player. However, this project, we believe, has the ability to deliver more than $500 million US of NPV to the company, which will be a significant catalyst to the share price re-rating. And then thirdly, last year we expanded our activities into Côte d'Ivoire, Ivory Coast, which I don't know how many people are very familiar with Ivory Coast, but it has been a champion in terms of gold mining destinations over the last 10 years. There's significant investment going into exploration, development, and producing mines, gold producing mines there. We thought if we wanted to become a successful West African player, this was a jurisdiction we couldn't afford to ignore. We moved in there last year. We've picked up some fantastic looking ground, which I'll show you in more detail later in the presentation. And we've had some excellent initial exploration results. So from a corporate point of view, we've had a stellar year in terms of share price performance. Year to date, our share price is up 260%. If you look at it over the last 12 months, it's up over 300%. And I still think there's a lot of room to grow. We still have a number of catalysts coming. We have a market cap Well, since I've done this presentation, it's gone up from 698 to 770 million Canadian, about 415 million pounds. We've gradually got more institutionalized. We've got more institutional shareholders taking positions on our share register. We are listed here on the AIM market of the London Stock Exchange, and we're also listed on the TSXV market in Toronto. Our mine itself, which I said is our cash cow, produces about 22,500 ounces per quarter. Last quarter, we produced 22,600 ounces, of which we sold 19,000 ounces. We kept about 6,000 ounces back as the gold price kept on going up, and we sold those ounces above $4,000 in Q4. So Q4 is looking like it's most likely going to be a record quarter for us by any financial metric in terms of revenue, which would be close to $100 million in terms of net profit, in terms of EBITDA, and our returning money to shareholders via the means of a dividend continues. How was this achieved? Well, through the course of the year, we've constantly, or should I say, consistently produced with putting a head grade of just over 3 grams per ton into the mill. The key numbers I would suggest you look at here is our recovery. We recover gold at over 93%, and in the last quarter it was 94%. We believe we'll settle around about 94% for the next 2.5 years, and we will maintain this grade. Another good point to note here is we have around about 45,000 ounces of gold sitting on our stockpile that was deemed very low grade, 0.85 grams per ton. However, at today's gold price, we've got $160 million just sitting there on the gold on our stockpile. And these are ounces that have already been mined, costs have already been sunk, and at the end of the mine life or any period where we have low production, we can just pass these through at very little cost. So our all-in sustaining cost now is $1,000 per ounce. At today's gold price, we're making just over $3,000 for every ounce we produce, and we're on track to continue producing about 90,000 ounces a year over the next couple of years. So I've spoken about this great value we're generating from cash flow. However, I believe we're still a growth story. This is the Segilola pit. This was a project that was extremely difficult to finance. If you think about the jurisdiction it's in, Nigeria, where there were no other gold mines before, I was going around trying to raise money, and personally, someone without a track record in mining or history of building mines, I was going around trying to raise money, $120 million to build this mine. It's probably a story for a pub or something another day, which I can bring you in on. But eventually, it took about 15 months from signing our financing documents to actually drawing down the first cash to build this mine. And prior to that, we'd been raising money in small tranches of equity just to get us to the next milestone, whether it was a preliminary feasibility study, whether it was a bankable feasibility study, whether it was just getting overheads done. And because of that, we were very limited in how much larger we could take this mine. We knew at the time our drilling hadn't closed out this resource at depth. We knew there was significant upside potential in exploration. However, we just didn't have the cash, should I say, to drill this out. Since paying back our debt at the end of last year, we've had the luxury of very strong cash generation of between $10 and $12 million per month to the bottom line, and that's enabled us to see what's going on underneath the pit. We've done this by purchasing our own rigs as well as using third-party contractors. We now have 5 rigs turning here on drilling underneath the pit, and as you can see, we've started delineating significant amounts of gold underneath the pit, which continue to remain open. We haven't come up with an updated resource statement, but from our internal estimations, we already have everything you see in color underneath the black line is gold we've drilled out at mineable widths and high grade underneath the pit. We've got over 150,000 ounces grading at around about 5.5 grams per ton underneath the pit. Our drilling's continuing now. We're trying to get to our first milestone, our internal target of around about 300,000 ounces, from which we will look to put in a decline and start doing some underground mining to supplement the open pit mining. So the underground mining is at a higher grade. One of the things we're doing now is drilling some very deep holes, a very nervous time for us, but we believe there's significantly a lot more gold here than our maiden resource. The other thing I would like to point out is when we did our feasibility study, the gold price was around about $1,600 per ounce. So the pit design, you can see at today's gold price, has scope to be deepened a lot and scoop out a lot more of this gold, which you can see is just right at the bottom of this pit before transitioning to an underground mine. So there's significant upside in that respect as well. Lastly, on this point, I will say that, we are valued, we've had a very good share price performance. We're valued on our strong cash flow generation. If we decided to shut down this mine at the end of 2028 without mining any additional ounce of gold under this pit, we would be sitting on just north of $500 million cash. So you can see the impact of bringing all this gold into play subsequent to that and continuing the mine life. And you can see the reason why we've prioritized drilling underneath the pit. We've got all the infrastructure, we have trained up a workforce there, and we have a mining license that continues for another 20 years. We believe there's upside, not just underneath the pit, we believe there's upside in a regional scale. We are a first mover in Nigeria. One of the key things we have done is pegged a significant amount of ground within a 50-kilometer radius of the plant, and this means anything we find in this 50-kilometer radius is within trucking distance of the plant. There isn't a need to build a new plant. Perhaps there might be some crushing required, but we started drilling and making these small discoveries in these satellite deposits within this trucking radius at very, very high grades. In fact, one of the pilot cases we're kicking off next year is where you see the southern prospects there. We are going to be completing our mine design then and excavating a very small deposit there of around about 12,000 ounces, just to see what the process is going to be like for our team, and stockpiling that at the plant as well, and blending that in with our low-grade existing stockpile. So that's all I'm going to speak about in Nigeria at the moment. That's where we generate all our cash at the moment. And like I say, I do think we are a growth company. Our next project is in Senegal. Senegal is obviously a much more known gold jurisdiction than Nigeria. It has a number of operating mines there. 5 kilometers to the west of us, you have Massawa, which is owned by Endeavour. You have the Sabodala mine. You have Resolute with the Mako mine. There's recently been a mine built by Managem, the Boto mine to the south of us. We put the very first drill hole into this ground. It was just a grassroots field where we had a soil anomaly. We made this discovery, and we've now grown that into 1.78 million ounces of gold. A huge amount of value, which I don't believe is properly priced in. The other thing we've done, the whole 1.7 million ounces is in that license that's outlined in blue. Outlined in brown, and we've started consolidating our position. So we've added 2 more licenses, the one in blue and the one in purple to the bottom right. And just as we were coming towards, should I say, the end of our preliminary feasibility study in March this year, we made this discovery in the south of the license. You can see Baraka 3. And we figured we would put a hold on our feasibility study and drill out this discovery, because these would be additional early ounces. And those drill holes were successful, wide intercepts, high grade, and these are now going to be fed into our preliminary feasibility study, which we're aiming to release before the end of the year. Just last month, I don't know if anyone here follows Thor, we added this additional license, and this license, you can see our resource in the north and our discovery in the south. This license has a 30-kilometer strike length of gold and soil anomaly that hasn't been drilled out yet. As I speak now, the rainy season is over, has just ended. We are back in the field, and we are just about to kick off our maiden drill campaign here. We're going to be drilling here for the next 9 months, and I'm extremely confident that if at the end of this program, we would have drilled out a significant material resource to what we already have in Senegal. So we're very excited by this. Regardless of what the preliminary feasibility study comes up with, we know that by the time we pour our first ounce of gold, there's going to be significantly more gold than we estimate in the preliminary feasibility study. Speaking of which, our preliminary feasibility study, we're working alongside our EPC contractor that built our mine in Nigeria. We've become very good friends, having been through a rough time building that mine through COVID. They're our trusted partner. We have the same mine building team. We're looking forward to accelerating from preliminary feasibility study to an investment decision in Q2 next year. We believe even after the preliminary feasibility study, we will have the confidence enough to start ordering the long lead items here. We are on track to start building our second mine as a company before the end of the first half of next year. So we're transitioning from a single gold mine company in a single jurisdiction, and we're hoping to get to that next mid-tier level where we're going to have 2 producing mines in the next 3 years, producing similar amounts of gold. And then lastly, in terms of jurisdiction, we've moved into Ivory Coast. As I mentioned earlier, you can see the number of mines that have been built there. We've got 3 exploration projects there, one in the south, Guitry, and 2 in the north, Bundali and Marahui. Ivory Coast is underlain by all this greenstone that accounts for over 90% of West Africa's major gold discoveries. Our first project is the Guitry project, which we purchased from Endeavour. It was non-core for them. We put in what you may call a cheeky bid, a very lowball offer, and to my surprise, they accepted it because they didn't believe there was anything worth their while, a company the size of Endeavour, to take forward. However, our geologists thought different. After looking through all the data, reinterpreted the structural controls, and focused on this area that had an 8-kilometer by 5-kilometer wide gold and soil anomaly. And we completed our first drilling program earlier this year, which was 4,000 meters. And you can see some of the results that came out of there: 12 meters at 10 grams per ton, 16 meters at 7.9, 24 at 2, 16 at 2. And then looking closer into that target, we defined 6 mineralized lenses that remain open. This is just a small portion of the permit. I would personally call this a material discovery. Like in Senegal, we have just entered the dry season. We're back in the field. We have 9 months of drilling ahead of us. We're going to have news flow drilling underneath the gold mine in Nigeria. We're going to have news flow from 9 months of drilling in Senegal. We're going to have news flow from getting this discovery now into a maiden resource. Being very aggressive, I would even like to say in the next 5 years, this would be a project we would like to get into construction and start building our third mine. So this is blue sky exploration for our shareholders, and all of this is still underpinned by the cash flow we're generating in Nigeria. Lastly is our final project in Côte d'Ivoire. It's the earliest stage project, but this personally is my favorite project in our whole portfolio, probably because we haven't drilled it yet, and I can still arm wave. But this is a soil anomaly we found on the Birimian greenstone, which are the best rocks you can hope for in West Africa in terms of gold discovery. This was on a geological contact. We had this gold anomaly, which was 5 kilometers long by 400 meters wide. And then we went on and further did some rock chip sampling. These are all samples from in situ bedrock. And for the entire 5 kilometers, you can see these super high grades. 29.9 grams per ton, 5.8, some 28s, 13, 12, for the entire 5 kilometer long strike length. I'm super excited to start drilling this. We start drilling this in about 4 weeks, and we've allocated a budget of around about $750,000 for our maiden drilling campaign here to hopefully come up with a maiden resource. So hopefully there should be some great news coming out of here. This is a project now in our pipeline. It's the earlier stage project. Like I say, it's my favorite. It's got this blue sky potential. And we're in a situation where we are putting the first drill holes into this virgin piece of ground with a golden soil anomaly. So to finish off, look, we are producing gold. That's our base case scenario. We're producing 85 to 95,000 ounces this year. We should land in the top half of that guidance. Our costs are well below $1,000 per ounce. We have drilling programs in all 3 jurisdictions that we're going on. We are diversified as a company in terms of stage of development, so producing, construction, and exploration, and we're also diversified by jurisdiction. And we are committed to returning money to shareholders in a sustainable manner through the dividend that we've committed to over the next 2 years as a minimum. Thank you very much.